In an interview, Warren Buffett was questioned on how he was a big advocate of index investing and not trying to time the market. Their question implied how his having Berkshire holding a large amount of cash in the Treasury or T-bills contradict to his aforementioned belief. He was suggested a good alternative to invest in Berkshire's excess cash in a good index fund until he finds a new acquisition or buy back stock. If he had done this in the last 15 years, whilst keeping the $12 billion in cash cushion he wanted, his balance in cash, cash equivalents, and short-term investments in T-bills would have spiked up to $155 billion instead of $112 in 2018. They added that there was a difference between the two figures, which was an opportunity cost equal to more than 12% of Berkshire's current book value. So, how did the business magnate respond?
Welcome to Financial Market TV. If you're new to the channel and enjoy content like this, hit that subscribe button and the notification bell. Also, please don't hesitate to share your comments down below and give this video a like. Let's get started.
Of course, Warren acknowledged the alternative and stated how he is open for his future successors to take on it somehow. He said how he would rather have an index fund to carry treasury bills. If he was able to institute the policy back in 2007 or 2008, it would have impacted their movement as they approached the year 2009. But Warren also observed that it may have some execution problems between implementing the policy with hundreds of billions of dollars versus around a billion or 2 billion. As he looks back on the 10 years of bull market, it would definitely overwhelm anyone. Although their case stands as a rational observation for Warren, especially in the case wherein they're dealing with smaller numbers. On the other hand, if they're working with larger amounts, it could work for Berkshire in a couple of years in the future. Warren shares that they committed $10 billion in the past week with conditions that are not necessarily remote, but can enable them to spend hundreds of billions of dollars very quickly. If they did, those conditions would be well-deployed capitals, better than in an index fund, which is why they are currently operating on the basis of getting the chance to deploy capital, expecting they will come in numbers. Charlie Munger added, despite himself being conservative with cash than the next guy, he agrees with investing on capital deployments. Munger further explains that they would be able to put all the money in a lot of securities that would have done better than the S&Ps with 2020 hindsight. Having all that extra cash for time being and being strong on cash instead of investing all at once was not a sin for the big company like theirs, Munger explained. He recalled a case of Harvard spending every single ounce of their profits, including all their prepaid tuition from the parents. They were able to push it to the market at the completely wrong moment, making them a lot of forward commitments to the private equity. He shared how they had to suffer over 3 years of devastation. Munger shared how he didn't want to be like Harvard in a case like that. In addition, Buffett admits that they are fond of operating quickly, considering that those opportunities don't come indefinitely and frequently. He says that in 20 or 30 years, there will only be few number of times when opportunity strikes. And he quotes, "It'll be raining gold and all you have to do is stand outside." But of course, they'll never know when it will exactly happen, and they have a lot of money to commit. He said that if they had to choose between short-term treasury bills and index funds that would invest his money to America generally, he would go for the latter. But still, they still have hopes. He then added that their movement in Berkshire is running the business in a way that they think is consistent with shareholders who have a big percent of their net worth in Berkshire. Including Buffett himself in the past, they have a lot of people, clients who trust them with their net worth if they were able to follow standard investment procedures. Berkshire aims to make money for everyone, but with security that they would not be able to lose money permanently from anyone that buys their stocks with a fundamental business value. They weren't fond of having a million-plus shareholders and have a lot of them lose money when they keep their investments with Berkshire. "We know how people behave when the world is upset. They want to be with something," says Buffett. "People need an assurance for something infallible like a rock of Gibraltar, and these are the people they lean into."
Thanks for watching the whole video. Again, if you're new and like this type of content, subscribe to our channel. And don't forget to leave a comment down below and hit that like button. Also, click on the notification bell to get updated on our weekly uploads. See you in the next video.